Saudi Arabia's economy contracted for 2 quarters in a row for the first time since the global financial crisis, as the kingdom grapples with low oil prices and its businesses struggle to cope with economic reforms. The kingdom's gross domestic product shrank 1% in the second quarter from the same period a year earlier, when it expanded 0.9%, according to official data released on Saturday. The economy had contracted 0.5% in the first 3 months of 2017. Crown Prince Mohammed Bin Salman is leading the push to transform the biggest Arab economy at a time when crude prices are at about half their 2014 peak. But as authorities seek to reduce the kingdom's reliance on oil, they're also leading efforts among OPEC members and some other major producers to bolster prices by cutting output. The kingdom's oil GDP shrank 1.8% in the second quarter, weighing on overall activity. The data also showed how non-oil industries are still struggling with efforts to overhaul the economy and shore up public finances. The non-oil gross domestic product, the main engine of job creation, expanded below 1%, driven mainly by the government sector, the data show. There is very little capital spending going on in Saudi Arabia at the moment. The Saudi economy hasn't contracted for 2 quarters in a row since at least 2010, official data show. The kingdom doesn't publish quarterly seasonally adjusted data, which is used by some economists to define a recession. Figures released by the government's statistics agency also show. Within non-oil gross domestic product, private sector activity grew 0.4% after expanding 0.9% in the previous 3 months. The government sector expanded almost 1%. The construction industry shrank 1.6% after contracting 3% in the first quarter. Petroleum refining expanded 5.8%. The kingdom's total oil share index retreated the most in the Middle East, falling 0.9% at 12:21 p.m. in Riyadh. What we are seeing is stagnation in non-oil activity, said Monica Malik, chief economist at Abu Dhabi Commercial Bank. Second quarter data shows still very lackluster demand, even after the government reversed a decision to cut or freeze bonuses and allowances for state employees, she said. Economists expect growth to grind to a halt this year, compared with a growth forecast of 0.5% in the previous poll. To get faster updates and the latest news from the oil and gas industry, please subscribe to the YouTube new video channel and connect with us on Facebook, Twitter or LinkedIn.